Welcome back to Overtime. Investors extremely bullish for today's big IPO. Bullish, the crypto exchange rallying more than 83% after pricing at $37 a share, which was above its expected range. It opened at $90, hit an intraday high of 118, halted within moments of opening due to that volatility.
Well, sticking with that theme, some of the biggest M&A deals of the year have been announced in the past 2 months as well, and there have been 38 deals valued over $10 billion so far in 2025. That's the most ever at this point in a year. That's according to Merger Market. So will the rainmakers stay busy? Joining us now is Tony Kim. He is co-president at Centerview Partners, one of the top independent banks for deals. Tony's recent work includes advising Scale AI on Meta's investment at $29 billion valuation. And I know you are staying busy because that's just one of a few examples. I do want to start with the IPO piece of this, though.
Great, yeah.
Because we have seen just these big pops on the first day of trading. We just talked about bullish today. You saw it with Firefly last week. We saw it with Figma before that. I could go on down the list. Is the read-through here that there's so much pent-up demand when these names hit the market, or is it that they're being priced too low, given the fact that there's so much pent-up demand?
You know, I think the right read there is the IPO market's been weak, and it's coming back. And so you want to price conservatively and make sure that they land well. Interesting stat, over the last decade, there have been about a dozen IPOs that landed north of 150% gain on the first day. And this year we have two. We have Figma and Circle. And so clearly there's that pent-up demand that you're talking about. But it has been concentrated in a few sectors we were just talking about. Defense tech, AI, crypto, and less demand for the other sectors.
We seem to be seeing deal making in those sectors too, but it's also expanding out into other areas as well. I mean, I think about the recent rail merger, some of the stuff we're seeing in the energy sector. I guess, what is your outlook for M&A activity too?
M&A seems really robust right now. I mean, we had a moment in April, post-Liberation Day, where everything kind of seized up. And that's really because of the uncertainty that it posed. What's happened is the market settled in, people sort of see the soft landing the way through. And then in June, July, August, you saw that pipeline start to build. And so you're seeing some of those deals get announced now.
2.5 years ago, software was going through some rough times. We saw a bunch of companies get taken private, some moves get made. How long before the sharks circle again in software, given the action we're seeing, and who are the sharks?
Well, I mean, I was watching your segment earlier on AI and software. I mean, I think that's sort of the big question right now sitting over. It's like, what are the impacts? It's sort of like a parallel of tariffs. Like, people didn't know how to analyze that. You know, people are trying to figure out how to analyze AI and software. And I think you need to have some certainty there before you see deals actually manifest.
But you are seeing deals like Scale AI get done, where people like Mark Zuckerberg, there aren't that many people like Mark Zuckerberg, with enormous hordes of money are willing to invest it in the future they see here. What do you liken that to? You've been doing this a long time.
Yeah, well, look, you know, the one sector that is doing it differently is technology. So there have been a couple of big M&A deals. There's Wiz, there's CyberArk a couple weeks ago, but not as many deals as you might expect because that's such a big sector. In that market, these are not M&A deals. The Scale AI deal was not an M&A deal. The big sort of trillion-dollar tech companies are rotating toward these investment partnership licensing transactions. We call them lift transactions for licensing IP, founders, and talent. And you know, those are deals that allow a company like Meta to get a partnership with the things that they want out of the company, but not all of it. They're not buying it. And they've really, pivoted to deals like that. There have been sort of, I think, 7 of those done in the past couple of years.